Hey traders, and welcome to the second video in the Introduction to Elliott Wave series. The first video covered at a high level what the wave principle is and is not. This second video, we're going to take that topic a little bit further. But first, let me start off by asking you guys this question. How many times have you been following, tracking, or even trading a market closely and then been surprised when there's a massive move that rocks the market and either stops you out or is completely against what you were expecting? How often does that happen? You know, it used to happen to me all the time. It's a major problem that I struggled with. Not so much because it would stop me out of these trades left and right, but more so because I wanted to have an explanation as to what was going on. And when I would ask people that question, like what happened, most of the time I'd get an answer that was not particularly satisfying. I'd be pointed towards the news, for example. You know, oh, well, the Fed made this announcement, or the ECB made this announcement, or the earnings report was bad. But what I noticed very quickly was that there was not really any consistency as to the nature of the news event and the move that followed in the markets. Sometimes the Fed would come out with a very hawkish stance and the market would go up. And other times the Fed would come out with a hawkish stance and the market would sell off. So what gives? Well, the answer, in my opinion, is found in the wave principle. The wave principle will not lead you astray in this regard. Once I became fluent in the language of the wave principle, those moves stopped leaving me confused. In fact, I can't remember the last time I asked, why the heck did that happen? Right? That doesn't mean that a skilled Elliottian or someone that's fluent in the language of the wave principle accurately predicts the market 100% of the time. That's definitely not the case. But because we understand that all the price action that we see in the market can fit into one of these 5 core patterns right here, it means that even if the market has a big move and that move might not have been our primary scenario, we can take a step back and relabel that subsequent price action into one of these patterns. So immediately or very quickly, we can regain our footing and understand which door the market has opened as a result of that new price action. That's a very, very powerful ability. Okay, it's an extremely underrated ability. I'd go so far as to say it's a superpower. The market is talking to you. The market is constantly trying to give you information. It's up to you to listen to what the market has to say. So like I said, there are 5 core Elliott wave patterns. We have an impulse wave, we have a flat, we have diagonals, we have triangles, and we have zigzags. Memorizing the rules and guidelines that go into these 5 core patterns is really the key towards becoming a skilled Elliottian. Now we can piece these patterns together to create a bigger tapestry, as I like to call it. And that gives us context, that gives us footing, that gives us direction, that gives us the ability to start looking for high probability investment opportunities that are going to generate a positive return. But it all starts with these 5 patterns. So in the videos to come, we're going to be covering these patterns one by one, going over their rules and their respective guidelines. So you too can start becoming fluent in the language of the wave principle. Thanks guys. See you in the next video.